Look at this. The chat is already talking. Lincoln Woods starting the conversation before we even start the stream. My man, let's go.
Not even time to say good morning.
Good morning, everyone. Hope you're having a great morning. This is Stock Talk. If you're new here, we go live every Saturday at 11:30 a.m. Eastern, and basically just talk about what's going on in the market and hang out, answer some questions, and talk stocks because we love stocks and we're stock nerds. So thank you for tuning in. Um, Jake, how you doing?
I am doing great. It's a lovely Saturday morning here in New York. My body decided to wake up early, took a great walk, listened to one of our favorite books, which I'm listening to for a second time, 15 Laws of Success by Napoleon Hill. It is really crazy how that book almost predicts, I think it was written in the 1920s or 30s, and it predicts a lot of consumer spending habits, how the world has evolved. And this is before technology was even super mainstream. Just a really great book, great way to wake up. How about you? How's life up in Canada? It's been snowing there a lot, I see.
Yeah, it's been cold, but that book you just described, was it the 15 Laws of Success? No, I think it's just the Law of Success, actually.
Yeah?
It's just the
I'm
Law of
going to look it up.
Yeah, that is my favorite book. Like outside of The Intelligent Investor, that is my favorite book. It is incredible. I got to stop saying but if you are looking for a book that's not investment related and just about how to live and lead a better life, just The Law of Success, I think is the best book. It's by Napoleon Hill. As you said, it was written in like the 1940s or something like that, 1930s. And this guy was friends with Henry Ford and like Rockefeller and people like that. 1925. Yeah, and he was friends with, yeah, as I said, Rockefeller, Henry Ford, and he talked to these guys directly and asked them like what made you successful? What brought you to like this massive level of success? And the book is basically just everything that he learned through talking to these guys and being friends with them for decades. And there's a common theme between all of these guys that are successful, or really anyone that was successful at that time, not just the guys, but everyone he knew that was successful. They all shared these common themes, and the themes are shared throughout the book, and it's incredible. So yeah, great book.
I guess it's not called the 15 Laws of Success, and as you said, the Law of Success. And spoiler alert, there's 15 of them. So there was at least a little bit of truth in that. Anyways, really looking forward to continuing conversation that we're constantly having. I feel that this live stream is just a continuation of ongoing chats we have both in the Stock Unlock Discord server. I know that you are also writing a newsletter that is getting very, very, very great reception by our readers and subscribers. So if you are not yet subscribed to our newsletter, hit our website, stockunlock.com, and enter your email. Also, create an account if you haven't. We've got a lot of great software to use to help you with investing.
Oh yeah, one more thing. I gotta stop saying that. We made
I'm gonna like just clap every time you say Be like, no.
Okay, we made a new Stock Unlock Clips channel because we talk about a lot of things in these live streams, and it can be kind of annoying to go through the live stream. I understand it, and look for things that you want to listen to. So we started a Stock Unlock Clips channel where we cut up the entire live stream and post the segments that we think are most relevant. So if you guys want to go and check out that channel, or if you missed the live streams, go and check out that channel, and there will be a bunch of different clips from the most important things that we cover. So I just want to call that out because we were asked to do that. But yeah, Jake, what stock have you been buying? Let's get into it.
Whew, cutting right to the chase there. Yes, I did start buying a new stock this week, and I'm very excited to tell you all about it. It's a company many of us, I would say most of us, have heard before. However, what is different than before is this company's financials as well as their business, in my opinion, is going up, which got me excited because I thought that the stock price had went down. I'm going to walk through my investment thesis there. Full disclosure, I am a huge bull on this business. This is not financial advice. And if you buy this stock just based on what I'm saying, you are not being a good investor and you are doing yourself a disservice. I have my own risk tolerance and management across my portfolio of different stocks I like to buy. So again, please, not financial advice. Anything
Okay.
you want to add before we hop into the document, Daniel?
Yeah, great disclaimer. I think we're good. The SEC will not come after you. Fantastic work.
Uh, Anyways, I'm going to share my screen here. So I did take time to compile a doc. So we're not going to be scrolling back and forth. We hear your feedback. We love hearing from you guys in the chat. One piece of feedback we received was just stop scrolling so much, stop saying the word. So 2 things we're going to improve on this stream is less ums, as well as a bit more streamlined conversation, which we hope this doc will help with. So we'd love to hear your feedback, of course, as we go through it.
Yeah, let's get into it.
Let's get into it, huh?
Yeah.
All right. The stock is Airbnb. And this is not what, Daniel?
Not financial advice.
All right. Yes. Now the SEC is our friend. So we are talking about Airbnb. Full disclosure, I did start a position, a very small one in this company this week around Wednesday, I believe it was. And I'm going to walk through what I'm seeing in this business, what I like about it, 1 or 2 red flags. And as always, this is an open-ended discussion. Please drop your comments in the chat. Daniel, obviously, I cannot see those. So just let me know as they come in.
Yep.
Everything I'm about to post here, all the screenshots, except for the Stock and Lock ones, are directly from their press release. All of this is directly taken from press releases from Airbnb, not third-party sources with the exceptions of an article. So right off the bat, they hit an all-time high for both quarterly revenue as well as net income. So that's top line growing as well as the bottom line. This is also in an environment where there's lots of FX headwinds, and we will see that America is only, I think it's 45 or 55% of their total revenue, which we'll get to. And I want to point this out, Daniel. We're looking at their revenue graph right now, and you see these 2 circles I drew?
Yes.
Right here at the end of the first circle is when COVID hit. And this company, Airbnb, their business is they are a marketplace connecting hosts of homes to guests that then rent those homes for either short or long-term stays. The common use case for this is both travel and business. And while that is their core business right now, obviously your mind can run, which we can have a conversation about later, as to the other products and services they could layer onto that. As one would imagine, COVID absolutely decimated the rental market for obvious reasons we don't have to explain here. And you could see that in their revenue. Their revenue quite literally dropped to the floor. The company went through layoffs. They went through a really hard time. Now, if we look what was happening right before that, they were growing 45% and 35% relatively right before COVID hit. They got really choppy. And one thing I want to point out as we go through this presentation is it looks like that growth trend is continuing, which is incredibly exciting. And this company is now making all-time highs from how they were performing before COVID.
Big. One interesting thing that I heard people discussing about Airbnb, I don't own shares in this business yet. I need to do a lot more research before I consider buying it. But one thing that I think is a very fair point is COVID was the worst possible thing that could have ever happened to Airbnb's business. I mean, you shut down global travel, right? You literally shut down the economy, and the company made it through that. So unless we see something where the entire planet decides to shut off again, like if it survived that, then how much worse could it possibly get? And that kind of gives investors, in my opinion, confidence that this business isn't going to go under in the future. Like they can handle a recession. They can handle the world stopping.
And you know why that is?
And
it's because it is a well-managed company.
It is a well-managed company. Another fun fact, Jake and I have been on a what was that, a Zoom call with the founders of Airbnb. It was fun.
Yes, we do have a little bit of inside baseball there. Stock Unlock as a company was in Y Combinator, which is a very famous accelerator. Airbnb, I think back in 2012 or 2013, also went through Y Combinator. So we did have private access as members of that community to some private chats with Brian Chesney, who is the CEO of Airbnb. Definitely someone I trust with my money. Let's just be clear there.
Yeah, they're solid guys for sure.
Great comment, Daniel, because that is something I'm going to touch on as we go through. One thing I also liked about their press release is it was very clear. While they did make 2.9 billion this quarter, they are forecasting 1.8 to 1.88 billion next quarter. That is obviously a drop, but as you could tell, the seasonality of summer, people travel more. And you do see that even going all the way back to 2018. You see the bump in the summer. For the August report, it goes back down, and then they make new highs. So we will expect, and they are telling us, that they are not going to have as high revenue this quarter as last quarter, which is from the seasonality of the business. I like being given a heads up there. And I also think that that could make another buying up because people like to sell on short-term news. So not that I'm trying to predict what will happen to the stock, but we will also get into that. It's ran 10% since I bought it in 2 days, which I am actually not happy about. And here's the comment. 55% of their GAAP revenue was denominated in non-USD currencies. So even with the currency headwinds, which will, as we've discussed in past streams, become tailwinds as, well, if we theorize that currencies will restabilize at some point in the future, just a prediction, we should see more revenue tailwinds coming in there. That was something I like to see.
We have a comment from Eduardo. Airbnb is at an all-time high free cash flow and only going up. The only risk I see is potential local regulation. I think this is another very good comment. I have a friend who have actually invested with privately in private real estate. And he was warning me because I was looking at buying some Airbnbs and getting into the Airbnb business around Calgary. And he told me that the regulations are starting to get strict, like more strict. So condo buildings, for example, they don't really love short-term rentals and people coming in and out all the time. And then the people that live in those condo buildings are like, well, there's strangers in here all the time. So a lot of condo buildings are starting to clamp down on that and saying no short-term rentals in our buildings. The city of Canmore, actually, one of the small cities or towns out in the mountains near me, the mayor is trying to stop short-term rentals altogether. So yeah, that's a very interesting point that Eduardo brought up. Definitely something to look into and consider.
Yeah, I think that is a really good comment. The counter to that, from what I've heard, is there's a really, really deep, what might even go to Supreme Court level argument going on there of you own your own property, right? Or at least you think. So is the government even allowed to do that? I would also say that this market has ran red hot for hosts and it was bound for a pullback. We have seen tons of videos of people on our YouTube ads as well as all over TikTok just blasting in your face, hey, you could get all this passive income, just buy these Airbnbs. And it got totally flooded. And in my opinion, it did go too far. So I think that this is a natural market stabilization. However, based on what I've been seeing and their growth and how this is an international business, not just in Canada, not just in the US, but also Asia and Europe, it is very hard for me to see those laws being enacted across the entire world. However, really great point and something to keep in mind. That's my opinion on it.
Yeah, what I would say as a counterpoint there is, I mean, the regulations have been getting more strict. And as they've been getting more strict, Airbnb's free cash flow and revenue has been increasing. So as of now, it doesn't look like it's really affected the business too much, at least in my opinion.
I believe that the hosts will still be there. And if anything, there could be a positive effect where the grifters and people looking for cheap value that don't actually care about hosting are going to have too high of a barrier to entry to get in. However, supply and demand speaks for itself, or at least in my opinion. And at the end of the day, what consumers want will be given to them. So it could just leave the better hosts left to continue to serve those people.
Yeah.
Anyways, continuing to go through this just for the sake of time. Net income, as we said, up 46% on a 42% margin, which is just incredible. We could see here in Stock and Lock, this is their net margin over time. And you can see how much money they started losing during COVID. One thing I want to call out is right around here, they did have a 25% layoff. And this goes back to something you were saying before, Daniel, of, wow, this company can weather anything if they made it through COVID. What can't they make it through? And I think it's because the CEO is able to make very hard calls. We see a lot of issues with companies who aren't able to have layoffs at the right rate because you only want to have one. You don't want to have multiple, but it's hard to really pull the trigger. It's one of the hardest things you could do as a business owner. I can't imagine doing that. And, Brian Chesney did that. and you see that being reflected in their margins. There's a little bit of a lag since I'm sure people had payment packages and things like that to have a smooth exit. I also heard that the company was helping, literally spending company time and money to find the laid off employees jobs and things like that. So in terms of executing a layoff and keeping morale of your company high, even though it's never a happy thing, they executed that brilliantly. They also raised $2 billion during that time to make sure that they could handle operations. I do want to point out that as of last report, they have $9.6 billion in cash. So I'm not really too worried about the $2 billion in debt. I would like to see them pay that off, but it is not a risk to me. And just to throw some growth numbers on this free cash flow, plus 80%, $3.3 billion in the trailing 12 months. And I did a little bit of forward projection here, Daniel. We're looking at just shy of $4 billion in free cash flow if you annualize the current, or rather last reported quarter, assuming no growth.
So what's the market cap today then?
When I bought, the market cap was around 66 billion. I haven't rechecked it, but I'd imagine it went up to 70 or 80-ish since it's ran about 10% since I bought it.
Okay, so you were buying it essentially near 20 times free cash flow, which is
it was at 19.42,
which is about probably around 5.1 free cash flow yield. Not bad. The only thing, this is a great doc, Jake, but just to speed things up a little bit, the only thing I remember about Airbnb is I saw that they had $600 million of stock-based compensation in the past year.
Yeah. For the remainder of this, I'm going to take just 3 minutes. I'm going to go through this all, and then we can decide if we want to talk about any of it or not, because that stuff is here. Nights booked from long-term stays went up 20%. 20% of their stays are over 28 days. 45% are over 7. So people are staying there for longer. That means more predictable cash flow when you keep the houses full. And this is a crazy stat, Daniel. I threw 2 exploding heads for this one. Hosts on Airbnb as a gross amount have made $180 billion. That's almost triple the market cap of Airbnb. So one of the reasons why people like this company so much is they are giving back, since they don't take all the money. The hosts obviously get that money too. We can skip over this, and I can share this doc if people want it. But this breaks down their international revenues. The one red flag, Daniel, and this might be a good talking point for when I finish. I did hear in a book I was reading called Woke Inc. We could talk about that book too. I just finished it. It was written by Vivek Ramaswamy, who is an ex-biopharma CEO, very decorated business person. He said that Airbnb is sharing lots of user data with China at their will. They actually hired someone from the federal government who resigned 6 months later over this issue. So this is one red flag. It does seem that Airbnb is buddies with China. So there could, for an investor, you need to ask yourself if you feel comfortable with that. This is something I'm keeping tabs on. It's a little confusing since they also closed down all their Airbnbs in mainland China, likely due to COVID. So this company is not playing just for America. They are playing internationally, and different people will have different opinions about that. As you said, $234 million in share-based compensation. But this is one of my favorite parts about this company, Daniel. They have a $2 billion share repurchase program, of which they had already repurchased $1 billion. So they are more than covering and giving back to shareholders what they're diluting through stock-based compensation. And they have an extra $1 billion to buy back, which I strongly believe that they are going to do. They're not overhiring, and the CEO is amazing. That's why I bought 3 shares this week. I'm done. And that is my case. I am a huge Airbnb bull. That was not financial advice, but walked you guys a little bit through of my investment thesis there.
Okay, so we have some comments here. Nathan says, my issue with Airbnb is that Booking implemented something similar where you can list your property on their sites. Of course, people can list on both, but maybe the competition will catch up.
That is an interesting point. Is that talking about the moat they have around their marketplace and a competitor potentially going in and creating a similar home marketplace that people would migrate to?
Yes.
So I try to relate this to other businesses I've seen. So we'll think of eBay, Facebook Marketplace, and someone could come along and say, hey, it's really easy to create a marketplace where you can buy and sell things. What's not easy is creating trust as well as a review system and everything that comes along with making someone feel confident using their cash. I would say for renting a house, even a hotel, it is something that people really do a lot of research in, because this is a place where you'll live. There's a lot of deep human emotions and things that get tied to that. So there is Verbo, which is one. And while they do have a user base, it is challenging for me to see a startup just come in and really disrupt this business. I'm not going to be naive and say that can never happen, but I do think that there is a moat around their brand, their marketplace, and Airbnb is a noun at this point. I mean, are you seeing more Ubers and Lyfts come up for ride sharing apps either? I just think it's really challenging to build. You have to think you have to get so many hosts on this, right, to even have the supply there. And I just don't think it's an easy problem to solve, to pull tons of hosts to different platforms when these platforms and Airbnb have hundreds of millions of dollars at their disposal to continue to give customer service and support. I personally believe, in my opinion, that is a moat. Just my opinion.
Just so you know, Booking is not a startup. It's a pretty big company, actually.
Say that again. Booking, I might have missed that point.
Booking, I think it's booking.com. They're a huge company. They're not a startup.
Oh, yeah. I thought when you said bookings, you were talking about the noun bookings.
No, I agree with you, though. Like, for example, I just booked an Asia trip. It's all booked. And we only used Airbnb. I didn't even consider another platform just because I trust Airbnb so much. I've used it so much. And that's just where I go. I literally didn't even look at hotels, didn't look at Booking, didn't look anywhere else, just booked everything through Airbnb. And they also added in that it's the new insurance or something like that. So if your Airbnb gets canceled for any reason, like they hook you up with a new one, and it's just very user friendly and you can really trust Airbnb. They really put people first, which I love. So yeah, it's great.
Yeah, I see them as the leader, and of course, people come with competitive products. But from what I've seen, they are forming a real moat. And there is a conversation to be had too, Daniel, about the offshoot products and revenue streams you can build off of Airbnb's business. And their employee population and CEO seem incredibly motivated and driven and smart. They support remote culture. I have a full belief, just being an engineer myself and looking at what they're building, that this company is very capable of continuing to scale and create new products. Something I did not touch on here that's all over their press release is the new features they're working on. And as we head towards a more gig economy where people are working remote, I do think there's a huge revenue opportunity for them to integrate more in the travel experience, not only for just the rental, but also for activities you do while you're traveling, as well as supporting more long-term stays, a month plus, where they could build real communities around people doing short-term stays in different places and actually buying property. That was, of course, speculative, but as a creative myself, I see a lot of potential with Airbnb's cash flow and employee pool, as well as their leader, Brian Teskey, having the ability to execute. So taking a bet on the leadership and company as well.
Yeah. I mean, I think Airbnb is a solid business. It had that free cash flow yield of over 5% recently. Don't know about that anymore. Looks solid. It's growing. Free cash flow is growing. Everything looks great. Yeah, it could be a great long-term investment. You bought 3 shares. We'll see how that does.
Up 10% in 2 days or 3 days, which sucks because I wanted to buy more for cheaper. So I'm going to be a little patient there.
Right on. Well, yeah, let's start answering some questions from the chat. That is the stock that Jake bought this week. So yeah, let's get into some stock talk. I'm going to take a look through the comments here, see if we got anything. I did see one question up here from Eduardo. Okay, this week you talked about EQB, Equitable Bank, and how small caps are way too low. Any other stocks in this category? Yeah, so I am a happy buyer of small cap stocks. I know that small cap stocks, are not for everyone. I understand that. I respect it, but I love them. I think they can be great. And I shared this chart. I'll pull it up. It was a chart showing the forward price to earnings ratios of small caps, and I put it on my YouTube channel, my main YouTube channel. Sorry, everyone. I just need to find this photo. Right here. Okay. And then I need to share my screen. Share. Yes. Okay. So this right here, this is the forward price to earnings ratio of the S&P 600 small caps. It's sitting at 11.9, but recently it bottomed out here at about 10.5. And the only time in the past about 23 years where small cap stocks got this cheap on a forward price earnings ratio basis was literally during the Great Recession, at the bottom of the market and the Great Recession. So I thought that people were selling off small caps a lot because, if we're entering this high inflationary time and or a hard time in the economy, like small cap stocks don't have as many resources as a company like Apple to survive. You know what I mean? Like Apple can raise infinite dollars if they need it, but small caps, it's a lot harder. So I think people were selling off small caps a lot for that reason. But there is a lot, not a lot, but there, in my opinion, there's a handful of small cap companies that are generating cash flows, growing revenues at 20+% a year consistently. And they were selling for price ratios that I think just got silly. So yeah, I've been buying small caps for probably 6 months now. Not solely, by the way. Like I've also been nibbling, Amazon, Google, things like that. But yeah, some DCAs definitely went into some small caps.
So a question for you there, Daniel. When you are looking at small cap stocks as compared to a medium or large cap, do you change the microscope lens you're using when analyzing those companies? So for example, do you have less tolerance for debt? Do you have less tolerance for slow growth? I would say, at least for me, when I'm looking at small caps, I get a little bit more magnifying glassy on their debt as well as their cash flows, just because, as you said, in a recessionary period, they don't have as much ammunition to stay in.
Yeah.
It seems like you're shaking your head, though. You don't look at them any differently?
I don't, well, I was shaking my head at you saying, okay, well, what if revenue is growing slowly? What if, what was the other one? If they have a lot of debt or something like that? I look at every company with a blank slate. But what I will say is that when I invest in small cap companies, the microscope is huge. And I read the entire SEC filing, the entire 10Q. I look into everything that I possibly can about this business. I literally try to learn the entire business inside and out as if I'm like the CEO of the company. Like I want to know everything about it. And then once I understand everything about it, then I can make my decision. One that I bought recently, like I haven't talked about the stock. It's in my $1 million portfolio challenge on my YouTube channel, but I have never made a video on it. I've never talked about it. And man,
the suspense is killing me. What's the stock?
Okay, here, let's go.
You're like dangling a fresh piece of meat in front of a hungry dog right now.
All right. I got to make a disclaimer here, though. Do not buy this stock, okay? It's ran 100% on me since I bought it. I've doubled my money on it. And I don't think it's cheap anymore. I'm still holding it, but right now, honestly, I do not think it's cheap anymore. But when I bought it, I thought it was really, really cheap.
Well, apparently a lot of other people did too, because if it ran 100%, like, did they report earnings? Do you know why it ran up? Was it just regular market movements?
Okay, so this company, this is it right here, Magnet Forensics. This is in the cyber security space. And what they specifically do is they work. So this company, I'm going to back up a bit. The CEO of this company founded it because he was a digital forensics officer with a police force in Canada, actually. It's a Canadian company. And basically when he was working on the police force, he was like, man, this is taking way too long. Because what happens now is in cybercrime, there are so many different digital pieces that you need to put together and links that you got to make. Like if someone sent a text on their phone at this time versus when did they send an email on their laptop? Like there's just so many data points. And this guy was like, this is ridiculous. This is so inefficient. The times, like the technology has not kept up with cybercrime. So what he did is he went out and made this platform on his own because he was a software engineer as well. And he made the first platform for Magnet Forensics, used it in his own local police station, and like it just took off. So he built it out of necessity. It took off, and then he left the police force. He still works with the police force closely, but it took off. He's continued building it, and it's just been growing like crazy. So yeah, the company helps digital forensics and private companies find links in their data to help them become more efficient when they're looking into cyber crimes. And they're like leading the market in this specific market. So they IPO'd last year. at about $22 a share. And then, everyone knows what happened in 2021, right? IPOs, every single IPO ran like crazy. Like, look at this. This stock ran, I'm going to zoom in. This stock ran basically 200% within the matter of 3 months after its IPO, which was stupid. Doesn't make sense. That should not have happened. But then what happened is everyone bucketed IPOs into one basket, and we're like, okay, well, all the stocks that IPO'd over the past year are bad. We don't want them. They were a bubble. So then from the peak to the trough right here, it sold off 76%. And it was literally down here in the $16 and $15 range that I found it. And I was like, looking at the fundamentals, I was looking into the company right here. And this was actually on the flight over to Portland, Jake, when me and you met up in Portland. And on my flight, I was researching all of my notes on this business, and that's when I decided to buy it. And I was like, it just looks so cheap.
Awesome.
And now from there, it's literally doubled, up 107%. So I don't think it's cheap anymore. I think it's probably around fair value. But yeah, it's just a cybersecurity company. We don't have their Q3 results in stock unlock yet, unfortunately, but they reported 40% revenue growth year over year, and they've upped their guidance the past 2 quarters. So every single time they report earnings, they up their next quarter guidance because their business is seeing increased momentum, like literally every single quarter. So
yeah, I have a comment and a question for you, and then I think that we could take we have a good backlog of questions in the chat.
Yep.
Comment.
Okay.
I love, as Peter Lynch says, non-sexy businesses. That is a business that is so not sexy. Who is working in police that has that insight and forensics, all that stuff. I really like that. I'm going to poke at you a bit here, Daniel. Okay. We both have the same value that we only like to invest in businesses, industries, and companies that we understand.
Yeah.
If I know you well, which I do, you do not have a background in forensics or anything that has to do with police. Now, I am confident that you did your research. So my question to you is, what made you feel confident enough in this business and the space they operate, since your background isn't being an expert in that space, to make that investment?
Okay, there's a couple things here. So I don't think that you have to be in an industry to understand it. Like, I'm going to admit, I don't understand this industry fully. I did look at their competitors, though. I looked at all of their public competitors, and I noticed that this company has higher margins. Higher margins is an indicator. It's not a for sure thing, but it's an indicator that the company has a moat in its industry because they have higher margins. So they can charge more for their product and generate those higher yields. And their margins were expanding. Their gross margin is 95%, dude. 95%.
What's their operating margin, though?
Their operating margin. So the company has recently started running at break even because they wanted to start investing in more growth. So they hired a massive sales team. That's why their revenue is starting to accelerate every single quarter. So the company, when you look at the free cash flow yield, it's low. Okay. Operating cash flow yield, it's low. But in prior years, their operating cash flow margin was around 50%. So they can operate incredibly efficiently. But right now, last year they announced, like, we're going to hire a sales team because we really want to expand into this market, get more customers, and just grow like crazy. So right now the business is operating at a loss, but they can be efficient. But
you took the time to understand why. Anyways, I think that's a really great answer. I mean, to paraphrase, like, you took the time to understand their competitors and things like that, and it wasn't a business that was complicated enough that you couldn't teach yourself, which I think is a great takeaway here. And as an investor, if you're watching, there's no right or wrong answer here. You need to ask yourself, what's your scope of knowledge? Do you feel comfortable investing outside of that? And if you do, just know the work in front of you to learn those businesses, and you will thank yourself later. I'm sure that we can continue this, but for the sake of hopping to other things, we have a ton of questions in the chat that we're backlogged on. Thank you, everyone, so much for these. Daniel, how do you feel about me just running through a few of them? And it won't be all. Oh, you already got one.
Yeah. So
cool.
If you head over to this, Wouter is asking about Canadian National Railroad. If you head over to our Stock Unlock Clips channel, Jake and I did like a 15-minute analysis on CN Rail versus CP Rail. It's over on the Stock Unlock Clips, and yeah, you can go and check out that video. We talked about it in depth over there.
I just pinned the comment. I'll try to get that link actually back in the chat so you don't have to scroll back up. Someone was asking about the difference between net income and free cash flow up there as well.
I think it was return on capital.
We probably had both of them.
Oh, okay.
Let's see. Yeah, I'll bring it up. So exponential investing. Also, I see you in the stream every week. Thank you so much for being here. Very quickly put, net income is on the income statement. Cash flow is on the cash flow statement. Net income at Stock Unlock for most types of companies, with a few exceptions, we don't like as much, since things that are recorded onto net income can include unrealized stock gains. Yeah, your cat is hilarious. And other charges, like one-time charges to the business. And typically, if you look at a company's net income, it could be a little bit spiky. Free cash flow, on the other hand, is quite literally the amount of cash the company generated from its operations after they subtract the cost of the capital expenditures to create that. So for us, we think it's a more real profitability metric. So on Stock Unlock, we have a glossary. We go super deep on defining all these as well.
Yeah,
I'm not sure if you were laughing at me or your cat, Daniel. I got a little self-conscious during that.
Oh, no, I'm not laughing at you. Sorry. Tuna is like literally rolling all over my keyboard right now.
I'm just waiting for you to like leave the stream, and I'll just be here deer in the headlights because Tuna, closes the browser window or something. Tuna is Daniel's cat, everybody.
Okay, so Ralph asks, how does stock-based compensation increase free cash flow? Can you explain? Yeah, so stock-based compensation increases free cash flow because the business is not actually using its own cash to pay employees. What it's doing is diluting the stock to pay employees, and that is not a cash expense for the business. So they can add that back into operating cash flow, which in turn increases free cash flow, if that makes sense.
That makes sense to me. Let's keep on firing through these.
Cool.
I don't know if I want to talk about FTX, but I do want to recognize Dan C for asking it. I feel like this could be a really big conversation, Daniel, and I also feel that there's a ton of people talking about this online. So, Dan, if you want to hop into our Discord, we have a free Stock Unlock Discord. If you tag Hippo Fluff, which is me, Jake, I will be happy to talk about this via chat. But I am almost a little bit sick of hearing about the FTX thing, to be honest. We're here to talk about stocks. We've never talked about crypto. We're not here to crap on it or say it's the best thing ever. We just stick to what we know, and we don't know crypto that well. And it seems that Sam Bankman-Fried doesn't either. So who does? That's the most comment I have. Let's see.
Yeah, we're just not the people to talk about this.
Yeah.
There's people with a lot more educated opinions than us, and personally, I've just avoided crypto.
Royal Domi, apologies if I'm mispronouncing. You are awesome. Your support is greatly appreciated. 42% of Stock Unlock subscribers actually purchased the year. And while we're not here to oversell, because we know a lot of you are already on, thank you so much for your continued support. And just wanted to highlight that. We really appreciate you guys coming, and it's really fun to interact with you all. It really helps, all the endless hours coding in front of a screen, just me and Daniel, endless hours doing a million things. Honestly, I don't know how you juggle it, as well as the entire team here. It's just really great to see comments like this. So
thank you. How you juggle it.
Say that again.
Passion is how you juggle it.
We're juggling things. We might be dropping a few balls, but if you're juggling like 20 and you drop 4, still got most of them.
You got to make some mistakes. That's how you learn. That's the best way to learn. Okay, someone asks, what do you think about Intel? Intel is interesting because there is a serious argument that the company is undervalued right now, except it's producing no cash flow. It's producing a lot of operating cash flow, but the free cash flow is gone because the company is investing so much in CapEx. But here's the thing, is the world is kind of decoupling right now. We're seeing like deglobalization. So a lot of semiconductor production, I believe, goes through Taiwan Semiconductors right now. I don't think the US likes that. So what I think is going to happen is the US is going to basically give Intel all this money like they just did, Intel's going to invest in their own chip production to become like the gold standard. And then a lot of chip production is going to go back into Intel, in my opinion. And when that happens, when the capex is done, the company should, generate free cash flow again. And historically, it's generated like $20 billion a year in free cash flow, $100 billion market cap today. That's a 20% free cash flow yield if they can get that back. That's good. That's really good. But the thing is, I've been reading, I don't know too much about this, but I've been reading that the capex cycle is going to last about 5 years. So over the next 5 years, the company is basically going to be burning cash, losing money. And in my opinion, cut the dividend. Like, why are you paying a dividend during this capex cycle? It makes no sense.
I get really frustrated about this too. And correct me if I'm wrong here, Daniel. Why do people who run companies overcomplicate what a dividend is? If a company has extra cash and they want to return money to shareholders, you can buy back shares or you could pay a dividend. However, remember it's coming from the free cash flow. So why would you continue to pay that out? We've even seen companies take out loans to continue to pay the dividend.
Yeah, they do that.
I'm not saying Intel. Companies have. I need to look it up. I think maybe Exxon. I can't be quoted on that. I'll need to look it up. Some of the oil companies did during COVID. They took out loans to maintain their dividend.
Yeah,
that just makes me want to run away from those stocks like the plague, just because it seems like poor financial management to me. You're trying to prop up and keep up the stock price, keep shareholders happy, avoid a sell-off, while also at the expense of harming the profitability of your company. Conspiracy theory here, just to really hit a point. I think that a lot of people making those decisions are in their 40s, 60s, 70s, old rich people running these companies that have maybe 3-5 years left. They want to cash out their stock. They don't want to lose money. So they are incentivized to keep that share price up. So I don't think that they give a darn. Honestly, I don't see how it's mathematically makes sense. Anyways, over.
Yeah, Jake, a lot of companies do this. TELUS, for example, up in Canada, they're currently taking on debt and diluting, by the way, to continue paying the dividend. Because, as you said, and as Alex is saying right here in the comments, if you cut the dividend, the share price will fall. They don't want that to happen. So they leverage up the balance sheet, which is actually not in the best interest for shareholders, just to make the illusion that everything is okay under the hood. For the people that don't take the time to, go read the cash flow statement and take a deeper look. Because it seems like dividend, as long as the dividend is being paid, I think investors kind of can get complacent and they're like, oh, well, everything is fine, right? But not always. I know.
Crazy.
Yeah, you can go deep there. We have another comment from Eduardo. Do you think inflation has peaked? If don't, what are the hot sectors to watch in the next few weeks? So I don't know what's going to happen in the market over the next few weeks. Like, think about this. Last week, Jerome Powell came out and said, hey, you guys are being silly in the market. We are not going to stop increasing interest rates anytime soon. Not going to happen. Stop this nonsense. And then a week later, inflation comes out a little bit lower than we expected. Now everyone's like, they're going to stop raising interest rates. Let's buy so many stocks. It's a fun time in the market again. 1 week later, after Jerome just said, we're not stopping. Like, if you asked me last week, are we going to have a 7% rally in the S&P 500 next week? Absolutely not. So
I have a little analogy for this moment.
The point there first, Jake, is stock prices in the short term are absolutely unpredictable. And I don't know what's going to happen over the next couple of weeks. I don't know which sectors are going to run. I have no idea.
Yeah, I mean, good answer. I think to piggyback onto that, no one knows where inflation is going to go. And both of our investment styles, again, which is not advice, but is how we invest. We like to invest in single companies and their fundamentals. So no matter what the Fed is doing or inflation, while those factors do matter, they usually don't play a role in our long-term investing decisions. We're not saying that's right or wrong. That's just how we choose to invest. A little analogy on what I think is happening here, tying back to human emotions. I don't know how big baseball is in Canada, Daniel, but I remember so clearly being at a baseball game when I was younger, and they put in a pitcher. He walked batter 1 on 4 pitches, walked batter 2 on 4 pitches. On batter 3, this person threw 2 more balls. So 10 balls in a row, right? Everyone's like, God, this person sucks. The first time that person threw a strike, normally a strike is just not a big deal. People are eating their hot dogs, like whatever. But since he threw a strike after throwing 10 balls, you kind of heard this lull of, it wasn't a real hooray. It was a, oh yeah, like you did it. That to me is what's happening here with this inflation report. People are just looking for anything to celebrate and any excuse to be optimistic. And I have to agree with you where I think that optimism, this is weird, that optimism is itself optimistic, which is maybe stupid to say because that implies that it's optimism. But why are people just getting so wishful thinking here? They've been pretty clear in their statements to the public about their plans with inflation and how they think it's more important to cause a recession since they think the economy and the world will collapse if we don't get inflation under control. So they're not saying that they're happy about a recession, but what they won't say, because it will scare the public, in my opinion, is the global economy could collapse if inflation runs out of control. And you could see this if you examine history. So they're doing everything they can with the few tools they have to fix that. And we're going to see what happens. We're all living through it together.
Yeah. And I actually have the opinion that rising interest rates is a good thing for long-term investors because yields go up on all assets. When you live in an environment where interest rates are 0%, it takes all returns away. So I personally, as a long-term investor who's going to be investing for decades, I want interest rates to continue going up because Google's free cash flow yield will continue going up, dividend yields will continue going up, and every dollar I invest today, since I dollar cost average, the return on those dollars will go up if interest rates are rising, even though stock prices are going down in the short term. So yeah, it's a weird time in the market, man. It's really weird. Also, I was talking to someone else about this. So one of Jerome Powell's goals right now is to raise interest rates to slow down the labor market, right? So basically what he's saying is he wants unemployment rates to go up. So right now we live in a time where if people are being laid off and if people are losing their jobs, then that means Jerome Powell may stop raising interest rates, which in turn means that would be a good thing for the stock market. Which, to summarize all of that, people being laid off is a good thing for stocks right now, or at least that's what the market thinks. Like it's crazy.
Yeah, it's one of those topics we could spin on for a while. We have a really good question here, and then Daniel, I do have a hard stop in about 15.
Yeah.
So we might have some fun with the screener, looking for some small caps maybe. I think this is a good comment from Lincoln, though, and Lincoln is here every week. It's great to see you. Thank you for the support. Baba earnings next week. Any thoughts or predictions?
No predictions. I have no idea.
I don't have any predictions. I can say what I'm looking for.
Okay.
I want to see good cloud growth. Also, full disclosure, I own shares in this business. I actually started buying it when I thought the price was good, when it was at 220. This is not a huge position for me, so I didn't bet the farm on it. Obviously down a lot. I've dollar cost averaged into it a bit. I'm a little shaky at this point of what I'm supporting in China with all of their measurements they're taking around surveillance, as well as them completely killing the capitalist spirit by kind of taking over companies that people start, because you see what happened with Jack Ma. They're not really encouraging that, because if you do make a big company, you're just going to get controlled by the government, I think is the message they sent. Two different viewpoints on that one I'm looking for. One, that could be a bad thing for Baba for obvious reasons, and that there's less companies starting for them to sell to, as well as the spirit of entrepreneurship at that company being killed. But here is a counterpoint to that, and I know I'm arguing with myself here. China kind of killed any potential competitors probably that would have been coming up and challenging Baba. So Baba might have been born in a very perfect time where they become the main huge player, the one big tech giant in China. I'm going to be looking for how their cloud is growing. They also have some smaller media businesses, which I'm not a huge fan of, as well as how much they're expanding. One of my original investment theses on Baba was they weren't just based in China. They were growing to other places in Asia and expanding their marketplace there, their sales, as well as their cloud growth. It's going to be interesting to see. And China's still been shut down. When I bought the stock, and what remains true today is this is a 5+ year buy. I think it is incredibly confusing because of all the geopolitical things going on with China, if their economy is going to grow and all of that. So my personal position, and this is not financial advice, I'm holding and watching. I'm not sure if I would buy today because I feel less confident on analyzing the business I did before China made all those moves with more regulation. But that being said, I still think there's a really good chance this stock could grow. Obviously, this earnings report is going to tell a lot. So not really predictions, but that's what I'll be looking out for.
Yeah, I own a very small position in Alibaba as well. I started the position, I think, around 100 something, and then I added when it was 70. I don't actually know what it's trading for today because I don't watch the stock too much. But
it's down.
Yeah. What was I going to say? My investment thesis in Alibaba is I think it would be incredibly foolish for the Chinese government to harm their largest businesses in any material way that would affect them forever, you know? Like, I think it is actually in China's best interest for Alibaba to grow and succeed and continue paying them tax because it's a huge tax revenue for, you know, the country. And yeah, so that's my opinion on it. I think they're going to let Alibaba continue succeeding and growing. Alibaba is also expanding into other countries like in Southeast Asia, like Thailand, Vietnam. Those economies are exploding, like growing.
Indonesia,
Yeah, Vietnam, I think, was one of the fastest growing economies in 2021 and 2020. And Alibaba is building out infrastructure in that economy. They're providing them with cloud infrastructure. So, and Alibaba, one of their key core statements was they want to be a company that lasts for 3 centuries. So they're always focused on the long term. I think the fundamentals are okay. They have like 1/3 of the market cap in cash right now. So on every fundamental basis, I think it's stupid cheap. And I think it will continue succeeding over the long term. But there is definitely a risk with the Chinese government that no one really knows what can happen there. So that's why I limit it to like 3% of my portfolio. I would not go like 20% Alibaba. I would not be okay with that personally. But having some exposure, I think, is fine for me personally.
Yeah, and just to throw other viewpoints in the chat, Benoit here. For me, I don't buy any Chinese stock. I don't trust them. Too many opportunities in the USA and Canada. Great mindset. When there's so many questions around a stock, are there other stocks that you could gain more confidence on when there's tens and tens of thousands of them to invest in? I tend to think yes. And that's something to keep in mind when we're talking about these companies. There's just so many choices. Speaking of choices, should we bring up that screener, find some new stocks?
Yeah, sure. But yeah, as a lot of people I know don't invest in Chinese stocks. I respect it. It's a personal choice and it's a personal opinion, and you don't have to do it. So that's the joy of investing. All right. Boom.
Yeah, and I can handle comments and rude interruptions as they come in on the chat. And before we pass back off to Daniel, what you're looking at here is the Stock Unlock Insight Screener. We have had hundreds of requests for this tool, which is built around our own insight scores, which have proven to be very useful for not only finding good companies, but maybe more importantly, avoiding companies that could be laden in debt and all that stuff. So we have been engineering this for a little bit over a month or two, and we're looking to release it soon. If you are a Stock Unlock subscriber and you would like to beta test this and get access before it's released, hit us up on email, support@stockunlock.com. I'm one of the engineers on the site, and we could add you in because we're getting a lot of great feedback on this. And passing off back to you, Daniel.
Okay, so I have the live stream on my second screen over here. So if I'm looking over here, that's why.
Oh, fancy.
Yes. So what do you guys want to screen? Should we screen? Let's just screen Canadian tech companies first and see what happens. Because I'm a Canadian. Okay, we're going to look on the Toronto Stock Exchange. We're going to look at technology companies. What kind of market cap do we want? Do we want a market cap? No, we don't right now. All right, so Canada does not have a lot of tech stocks, by the way. So number one right here, we have DSG.to. This is the top rated. This company has the highest insight score, Stock Unlock insight score. And yes, the highest Stock Unlock insight score in Canada tech company. So let's go and take a look at it. So we can see right here that it looks like it got a little bit carried away in the 2000.com bubble. Absolutely crashed.
Looks like a skateboard half pipe.
Yeah, no kidding. But it looks like in 2004, the stock was like $1.48. If we compare this stock to the SPY, you can see that DSG is up 4,100% versus the SPY's 200%.
What if you drag the date back to, up to like 2012 or 2015? I'm curious if it's still just as high.
2012.
Yeah. I mean, that's
1,155% versus the SPY 150%. Even over the past 5 years, it's up 200% versus the SPY's 69%. So the stock, has been heavily outperforming the SPY consistently. And let's take a look at its financials. Yeah, so if we take a look at the trailing 12 months revenue, it's been basically growing ever since 2005. It's like 10x revenue over the past, 15 years. Not bad, really good. So yeah, definitely a good research candidate. I bet one of our newsletters actually was written about this company, by the way. And that's how I found it, was using the stock unlock screener. So yeah, that's a great company right there. We also have Constellation Software, Dry and Durham. What's number 2? I actually have not taken a look at this company. Canaxis. Okay, if we compare it to the SPY since 2014, another one that's heavily outperforming the SPY, up 1,000% versus the SPY's 95%. Looks like the free cash flow yield right now is pretty trash, though. Revenue's been growing. Revenue's at an all-time high right now. 336 million. What's cash flow doing? Okay, so cash flow is coming down, though. So I would definitely want to know why this is if I were going to take a look at the stock. Seriously. And what's free cash flow?
It also looks like the price was up a lot since way back in time, decade or two ago, but it has looked like it's been stabilizing a bit the last few years, or at least on the chart there.
Yeah, and you can see, like, here, let's go to the freeform tool, actually. Because stocks follow fundamentals. So if the stock is topping out, then that would kind of suggest to me that the fundamentals are topping out. And not in terms of revenue, but in terms of free cash flow. So if we go to free cash flow.
Yeah, these cases are always interesting to me. And I think a lot of investors miss this, where just revenue growth, as we say all the time, is not enough. It is, are you making money from that? And if you're not, I better hope that you're investing it and to try to grow the business, as opposed to having to spend more on headcount in areas that might not be growing the profitability in the future.
So those companies. Okay, so it looks like it's kind of been following its operating cash flow. You can see it didn't really follow operating cash flow back here in 2016, but outside of this area, you can see the stock, the green line, the stock price has been following operating cash flow quite well actually. And exactly right here, you can see that the operating cash flow has been coming down over the past about 2 years now, and that has been leveling off the stock price. So you can clearly see that stocks follow the fundamentals. And what's interesting about this, as we say, revenue growth is not the holy grail of investing. And if it were, then the stock would be going higher still, because revenue is at an all-time high. But stocks do not follow revenue. They follow the profitability, which is the cash flows. And since cash flows are not going up with revenue, the stock is not going up. So I would definitely look into that if I were looking into this business. Why is the operating cash flow coming down? Why are cash flows coming down with revenue going up? Because that would mean their operating cash flow margin is going down significantly, right? Yeah. It's dropped from 30% to 9%. So why is that?
That's not a good trend to see.
Yeah, but maybe they can get that operating cash flow margin back up quite quickly. Who knows? I would just take a look into that. I want to figure out why that is.
Yeah, it seems like a lot of these are being propped up by a high analyst score as well, which is interesting. Can we sort these on a profitability score? I'd like to look at one that has good profitability metrics.
Yeah, so if we take a look at the highest profitability, it is DSG.to.
Again.
The one we already looked at.
Yeah.
DND, Dry and Durham. I actually own shares in this business, a very, very small position. It's just another small cap that's been tanking, but price to free cash flow now is 5. So
are they growing? Are they growing this business? It looks like it's priced as if they're not.
Yeah, they're growing.
Top line's growing. Show me that profitability though.
Yeah.
Okay. Okay. All right.
The reason this company is the stock is down, this is what I mean, right? I love this type of business as an investor because every fundamental metric is growing, but the share price is down massively, down to the point where it's got a free cash flow yield of almost 20%. However, this business does have a lot of debt. They've done a lot of acquisitions to grow, and that's how the company has grown. And also, a lot of the revenue comes from the real estate market. They basically supply software for legal, like law firms, to write, mortgages and stuff like that. So with the mortgage market and with, real estate market slowing down, people are, saying that this business is going to see a lot less revenue and growth in the future. But they just reported earnings and the revenue is only down slightly, and they just announced a massive share buyback. Insiders are buying shares. So I own a very, very, very small position. Okay. I just want to make that clear. It's not big, but I like 20% free cash flow yields on growing businesses.
Daniel, we are almost at time for me. I'm not sure where you're at. In terms of the chat and our viewers, if you have any stocks that you'd like us to look at, probably take one right now for the end. My mother is actually in New York City with a family member, so I am not going to be coding today on Stock Unlock, which is a surprise. Hopefully the earth doesn't crack in two. Usually what I'm doing on Saturday after the stream.
I did see some comments about Truliev's earnings.
Yeah, and we did just get one after Trulieve. We could take the one from Nate Wells too that just came in. I'll look that up on my screen.
Yeah, sure. So Trulieve's earnings were not good, honestly. I'm not going to beat around the bush. They sucked. I was not impressed. I was not happy. I think the company is incredibly risky now because they have lost about $160 million in the past 2 quarters. They have $114 million left in cash. If you do the math there, they've lost $160 million in the past 6 months. They don't have 6 months left of cash at this point. So incredibly risky. Kim Rivers has also told shareholders that the second half of 2022, the business was going to be profitable, no problems. That did not happen. The business did not live up to the CEO's words. So it sucks. As a shareholder, it's not fun. It was not a good earnings. I am not impressed. I'm deciding what I want to do with that.
Well, damn, that sucks.
Yeah, and that's just me being honest, man. It's not fun. It's a part of investing, and I took a bet, took a risk. It's not playing out well for me, and that's what it is.
All right. Well, we'll let that story unfold. There's also 1 quarter as well. Like I know your original thesis was, very long, but I do agree with you. When the company's financials turn, it's not something to be ignored. So definitely,
well, it's not even just that. Well, it's mostly that, but it's the fact that the company and the CEO said the second half of 2022, our profits are going to come back. We're going to be profitable again. That is not happening, not even close to happening. And now she's saying, oh, well, next year we're going to be free cash flow positive. And my thinking is like, okay, you guys lost $160 million in the past 6 months. How are you going to get to profitability within the next year? That is a $300 million swing in operating cash flow within the next year. It's like, when I think about it logically, it seems like a huge ask and a big stretch. So I don't know. I don't know if I trust them anymore. I really don't know.
Damn. Well, anyways, changing to more positive things. Love this question, Lincoln. When does Stock Unlock IPO? So we raised the seed round, so we are far from an actual IPO. That being said, we're trying to grow this big. If you want to see that come sooner rather than later, invite your friends, tell everyone you know about Stock Unlock. We are seeing a lot of organic growth and things like that, and expect to see those trends to continue, which may drive us to an IPO at some future date, which is not within the next couple of years.
Yeah, no.
And that being said, I do appreciate Nate when we asked the chat, you guys want any stocks? Nate was the first one to answer. So you get it. This is the last one I'll be doing, Daniel, and then I'm going to go see my mother. I'm already 5 minutes over. I'm very, very bad at not talking about stocks, to be honest, because they're just so much fun.
I know, it's tough. Or you're sharing your screen?
Oh, yeah. It's I already have it up. So It seems that 80 other users in Stock Unlock already have this on their watch list, which is interesting. And this is a REIT, Daniel. Right away, I'm seeing very high earnings and FFO yields on their market cap, which at surface value, good sign. It looks like their insight score is also relatively high, generally a good sign. What we always like to do, Daniel, following your lead here a bit, is anytime there's a REIT, you need to ask yourself, who are their renters and what real estate market are they in? It looks like
Jake,
it is. What's up, Daniel?
we've actually talked about this business before. And one thing that we've said in the past about this business, as you just said, is you really need to take a look at their, like, who is renting out the real estate, right? And I have a very good source that has told me that the people renting from MPW are not in a good financial position and are at risk of going under, and they make up a large portion of this company's business. Also, if you go and take a look at the insider transactions going on, the insiders look like they are selling the stock consistently and quickly.
Oh,
Yes.
Oh my
So I
gosh.
think there is something going on under the hood of this business that has not shown up in its financials yet. And as I said, I have a pretty reliable source that has
The CEO sold 13 million of shares.
yeah, and then
The
the CFO.
CFO then wow.
Yeah.
Okay.
So yeah, they're selling a lot of shares.
Interesting. Yeah, I'd say for the person who asked this, go to their investor relations, look at who their tenants are, and see if you can confirm or deny what Daniel is saying here from his inside baseball comment. I'm going to assume it's true, but you should not. Definitely double verify, because that's pretty damning, Daniel. You you're hitting a chord there. If this company makes money off of their renters and those renters are about to default, that would obviously have an effect. Maybe that's why the CEO and CFO are selling. And it looks like you would have been better off just investing in the S&P most years in the past, where even with the dividend, the SPY still beats it.
Yeah, and this company, I think it's a dividend trap right now because I think the dividend yield is like 10%. So listen, I haven't done my own research on this business to confirm what my guy said. And by the way, it's Ollie in my personal Discord. I trust his analysis though. He's like a really good investor, and he basically told me, like, just avoid that stock. Don't even bother with it. So I would really look into it. Personally, I'm not interested in it, but if you are interested in it, really look into that.
All right. Okay. So I do not want to do this, Daniel. It really pains me. I need to head off. My mother wants to see me. I want to see her. She is an amazing person. Are you going to hang out? Or are we going to wave together? I know we're at an hour and 7 minutes right now. We usually lose track of time because we enjoy these so much.
Yeah, I'll probably hang out for a little bit more.
All right. Well, I'm going to look forward to watching the rest of this later today. As always, a pleasure being with you all, and enjoy your weekend, Daniel. Have fun stonking. I will be coding for Stock Unlock behind the scenes, working on that portfolio tracker, which you can have early access to if you want to join us as a beta tester. So hit up support@stockunlock.com. With that, I will stop selling, and I hope you have a great day. I'm going to close the window.
All right. See you later, Jake. Have a good day. Tell your mother I say hello.
Goodbye, everybody.
See ya.
Thank you, Alex Pohl.
Okay. Now Jake's gone. Does anyone else want us to take a look at any more stocks here? There was one I saw. I'm just looking through the chat now. I see someone asking about merch. I should have talked about this when Jake was here. Jake really wants to build a merch shop and hopefully start selling some Stock Unlock merch. So hopefully we can do that in the future. Okay, talking about Berkshire. Berkshire is an interesting one. Okay, we got some tickers coming in here. DFS, Rivian, please. Okay, let's look at Rivian. Let me share my screen. And I'm going to move this over to the other screen here, just so I can look at the chat while I'm looking at this. Okay, so we're going to look at Rivian. Was that the stock? Okay. I need to give a disclaimer here. I am a bear on this business. So this stock IPO'd last year. Amazon is invested in this company, I believe, and they hit a peak here of $172. They are now down 80%. They are an electric vehicle maker, I believe. Yeah, okay. So let's go and take a look at our stock unlock insights right here. And right away, we can see more than half of the insights for this stock are very bad. I don't like to see that. So we can see the profitability here is a score of 1.29. The lowest this score can get is 1. So that's almost as bad as it can get. Gross margin is negative 173%. Oh my goodness. Operating margin, negative 650%. Free cash flow margin, negative 600%. Unprofitable, lost 7.5 billion in the past year. Free cash flow negative. They've lost 6.2 billion in free cash flow, and their operations have lost 4.7 billion in the past year. So this company's not even close to making money. Not even close. Does have a decent balance sheet, I guess. I mean, they got 26 months of cash, which is over 2 years of cash. Not bad. Revenue increased by 105,000% apparently. Holy smokes. Okay, we got to look at this. We got to look at the revenue here, quarterly. Okay, so yeah, the revenue did grow a lot. 536 million in the past quarter. Last year in Q3, it was 1 million. So yeah, they've 536x revenue in the past year. And they've done $1 billion in revenue in the trailing 12 months. Cash flow, I'm not even going to look because this company is losing so much money. Market cap of $32 billion though. So this company is trading at 31 times revenue, if that's right. Yeah, about 30.5 times revenue. It's not even close to making any money. And I think this is incredibly speculative. Yeah, so personally, I would not be buying this stock. That's just my opinion. That's not, a recommendation or anything, but I think this company is incredibly risky because it's just burning cash so much with no promise of future profits at all. And that's a lot of the EV space. Like Tesla, I think Tesla's making a lot of money, actually. I'm pretty impressed by Tesla. Tesla is a great company, but too dang expensive for me. 70 price to free cash flow, yeah. Is NIO making money? NIO is 2.4 price to sales. Do they have cash flow, though? They have operating cash flow. It's not really going up consistently, but it's okay. Well, not okay, but is what it is. They're not free cash flow positive. $13 billion market cap. Yeah, I mean, I think a lot of these EV companies, like electric vehicle companies, were straight up in a bubble last year. Like, look at this. NIO went from $2 to $63 last year, 2,500% gain within a year. So electric vehicle companies were in a bubble. I think they attracted a lot of investors, but like they don't have strong fundamentals at all. So yeah, I just think a lot of these are really speculative, very risky. They're all losing money almost, except for Tesla. And yeah, I would just be careful. Okay. Wow, a lot of comments coming in. Okay. We got Rivian. We just looked at Rivian. How about another Canadian bank, BNS? This is Bank of Nova Scotia, if I remember correctly. Yes. Yeah. Okay. Can I do this? Is that better? I think that might be better. Okay. BNS. So banks have been in a pretty big bear market. The company's got a 6% dividend yield now. And we can see right here that it is down. It is down about 20-ish percent, 27% now from its all-time highs. It's got an earnings yield of 12.5%. Payout ratio is 45%. So interesting. Okay. It pays a 6% dividend, and that 6% dividend comes from 45% of the company's earnings. If they wanted to pay out all of their earnings, they could pay a 12% dividend right there. So immediately that's like, okay, this company can return a lot of cash back to its shareholders. But what is going on with the actual company? So revenue has not grown since the second quarter of 2020. It's literally just been flat. And that kind of sucks because the revenue grew very nicely, very, very nicely since about 2006 to 2020. But now the revenue is not growing. I would want to know why that is. Why is revenue not growing? What are earnings doing though? Okay, earnings are at an all-time high though. So earnings dropped in 2020. They've now come back to 10.35 billion, which means that this company's net margin has increased. Yes. So the net margin is at an all-time high of 33%. Interesting. Are they also increasing the dividends? They are. Dividend has recently increased. Interesting. Historical yield on cost. So yeah, they've been increasing the dividend very consistently. I would be concerned about this though. Like if the revenue doesn't grow, then how much can they really grow that dividend? That would be my question. Also, we can see that really over the past decade, the S&P 500 has yielded more than the stock, even accounting for its dividends, because right here, show the total stock returns, which includes the share price and the dividends paid. And over the past decade, it has yielded 90% versus the SPY's 191%. So even including the high dividend yield, it has not outperformed the S&P 500, not even close. But what about like over the past 5 years? Yeah, even over the past 5 years. So in my opinion, like it kind of looks like a good income stock, but in terms of like growth, it's not really growing right now, which kind of makes me unsettled. And yeah, so a nice dividend stock basically. But if we take a look at a stock like Equitable Bank, I think we have their Q3 earnings in here. No, we don't. It takes a few days. That's too bad. Anyways, if you take a look at this bank, for example, this bank is continuing to grow. They just reported earnings last week, and they're like the revenue is at an all-time high, and it's continuing to grow. And this is another Canadian bank. It's just a small cap Canadian bank. Doesn't pay as high of a dividend, but earnings yield is higher than BNS at 15% ish, and this bank is actually growing. So I don't know. It depends what you're looking for, I guess. If you want like, a high dividend yield, BNS would look better for income. But if you're looking for growth, not financial advice at all, but yeah, BNS doesn't really look like a growth investment to me, in my opinion. Okay, Nathan, interesting comment. What is your opinion on royalty income funds like AW.UN? So AW.UN is, I believe it's ANW. ANW. So this company, like basically, this company will just pay you royalties from A&W, like the fast food restaurant, right? I don't know what the fundamentals of these businesses look like. Yeah, kind of strange. So to me, these are like income investments. This is basically like I would view this as a bond in my portfolio, essentially. I would view it as like a bond from A&W. So as long as A&W is producing revenue and cash flows, you're going to probably receive this dividend. Hopefully, I don't really, nothing's for sure, but yeah. Are the dividends growing though? The dividends kind of look inconsistent. They kind of stopped in 2020, which makes sense. I would actually agree with that decision on the management because the world shut down. But you can see that the dividends are not very consistent. So even that dividend income, then this kind of shows me that the dividend income this company pays is not consistent. So is it reliable? I don't know. Historically, doesn't really look like it. Also, including the dividends, it's actually returned quite a bit, of 150% over the past decade, but it has not outperformed the SPY. So that's what I mean is like this is kind of like a bond from A&W. I don't think this is a very consistent dividend though. I don't know if that's going to stay around. I just don't know. And yeah, that's how I would view it. I wouldn't view this as like a growth investment either. It'd be like a bond, pretty much. Okay, looking at more comments. What is going on? Wow, lots of comments. Okay, what is happening? BNS has cut its dividend several times in the past 10 years. Yeah, so that's good to know. That's definitely good to know, especially if you're buying that stock for income purposes, which is essentially what it is, in my opinion. I would view BNS like a bond as well. You know, it's got a nice dividend yield, but it's not really going to grow, at least in my opinion. Um, in my opinion, investing in dividend yield is not worth it. You end up underperforming most of the time, if not always. I would actually disagree. I think dividend investing is awesome. I'm going to show you why. Let's go back to Equitable Bank. Because just because a company is paying a dividend does not mean that it's going to underperform at all. So if we go to Equitable Bank's financials tab, or sorry, dividends tab here, you can actually see that over the past decade, this company has been paying a dividend, not a very high dividend, but including the dividend and the stock returns, it's up 376% over the past decade versus the S&P 500's 209%. So it's almost doubled the S&P 500's returns while paying a dividend and while growing the dividend. So dividend investing does not automatically equal underperformance in the market. It really just depends on the underlying business. Like Equitable Bank is growing its revenue faster than the S&P 500, its net income faster than the S&P 500, its dividend faster than the S&P 500. And what matters is the underlying business growing faster than the S&P 500? And are you paying a decent price for that growth? Like if Equitable Bank was a 50 price to earnings ratio right now, you would have a 2% earnings yield on it. And basically you would take away all future returns. But since the stock, in my opinion, again, not financial advice, but since the stock is trading at a price to earnings ratio of like, what is it, 6.83? So it's trading at 1/3 of the price of the S&P 500. It's growing faster in every aspect. So that leads to pretty strong returns, in my opinion. And it's a dividend stock, and it's growing its dividends. It grew its dividend at 78% year over year. So yeah, I like dividends. I don't only invest in dividends. Also, like what dividends allow you to do for me in my RRSP, that's where I hold all my dividend stocks mostly. In Canada, at least, you're not taxed on dividend income. So that dividend income comes into the portfolio. You don't pay tax on it. And then what I do is I use that dividend income to buy more stock in dividend stocks. So it's almost like this compounding dividend snowball effect that's all tax free. Like that's awesome. And Equitable Bank, for example, they are projecting to have a $4 dividend by 2027. Now, just over the past month, before earnings, the stock was trading for $45 a share, right? So if it's going to have a $4 dividend by 2027 on a $45 share price, which is what it was trading at over the past month, then by 2027, you're going to be getting an 8.8% yield on cost in cash in your portfolio every single year, tax-free in a tax-deferred account that I can then use to buy other stocks with, which I'm probably just going to use to buy more Equitable Bank. But, you know, by 2030, if this company continues increasing its dividend at that rate, it could easily pay a 10% dividend. Honestly, it could pay a 10% dividend today if it wanted to. It would just, you know, use up most of its earnings. But yeah, so that will be a tax-free 10% yield on my investment coming into my account every single year that I can then deploy into other investments wherever I see fit, which is incredible. And it allows me to dollar cost average more and more consistently and through a down market. So if the market's down, I can use dividend income to dollar cost average, which is awesome. So I don't know. I like dividend investing. I think it depends on the dividend stock. Like, as I said, BNS, this company's not really growing anymore. So that dividend yield of 6%, that's kind of what you're going to get out of the stock, in my opinion. So it just depends. It all depends. So yeah. Okay. You nailed Equitable Bank. Thank you, Ralph. Appreciate that. I mean, it's up 20% since earnings, but that's a short-term rally. Who knows what's going to happen in the future? So far, it looks good, but anything can happen in the future. Okay, let's take a look Add some more stuff. Sorry, Jake. I know I'm saying still. It's a bad habit. I'm trying to fix it. Okay, Canada Revenue Agency applies tax proportion. Okay, is Merck expensive? Okay, I actually want to talk about this one, BTI. What do you think about tobacco companies? There's some really good free cash flow yields, for example, BTI. Yeah, BTI and tobacco companies. I mean, this is an interesting stock and an interesting sector because you're investing in tobacco, which causes cancer. So, I mean, yeah, they pay great dividends, but a lot of people avoid these stocks simply because of the morals behind the investment, which, I don't judge. If someone wants to invest in BTI, like do whatever you want. I'm not going to judge you. And I think that's, you got to make up your own decisions and invest in what you're comfortable with. So some people are not comfortable with investing in tobacco, but some people maybe. And I think either is fine personally. But yeah, these are like really good dividend stocks. And oh wow, the revenue is like not consistent though. I've actually never taken a look at this. It had a massive revenue decline. It lost like half of its revenue. Wow. What's going on with yearly? Okay, so revenue, yeah. That's another thing about tobacco companies is they're not really growing. Like the operating cash flow for BTI has not grown in the past 4 years. It's actually slightly been coming down over the past 4 years. So, and how much of that is paid out as a dividend? So they pay out about half of the operating cash flow is paid out as a dividend. So, I mean, I think the dividend is consistent. Like, I don't think the dividend will be cut because the free cash flow payout ratio is 56%. So their free cash flow could drop by 44% and they could still pay the dividend. But I don't think this company is really growing. And yeah, personally, I don't think it's like super attractive. Just my opinion. Oh yeah, do I think Merck is expensive? So do you know the ticker for this? I don't know the ticker for this. Merck and Co. MRK. I'm going to assume this is the one. Okay. So it looks like it got expensive in the tech bubble, and then it fell down. Then it fell down to 25. Yeah, Merck. Okay. Yeah, this is the one. Got it. So it fell 70% during the Great Recession from the tech bubble. And since then, is it beating the SPY? It is not beating the SPY. But what about with its dividends? I also don't know what this company does. Should probably figure that out. Okay. So, including dividends, it is beating the SPY over the past decade. You can see right here, if we zoom in, the stock is not beating the SPY. The stock is up 174%, but including the dividends, the stock has produced about 240%, 230%. So slightly outperformed the S&P 500. The dividend is also growing. What does the company do, though? It's pharmaceuticals. Okay, interesting. Sorry, my cat is trying to get up on my lap again. Hello, Tuna. Okay. Interesting. So the revenue actually hasn't really grown since 2011. What? What about the cash flows? Cash flows are all over the place, too. Interesting. Okay. Free cash flow? Okay, free cash flow is at an all-time high right now, but that is some volatile cash flows. So yeah, as an investor, like just for me, I don't really like companies with cash flows like this because it's not consistent. And just looking at that, I don't know how predictable that is. But what's also interesting is even though the company's cash flows have been all over the place, like it's just continued growing the stock. That's really interesting. So yeah. Wait, what's the free cash flow yield? 6%? I mean, the question is this expensive? I don't know. I mean, the free cash flow yield is nice, but is the cash flow going to stay this high? Is it predictable in the future? Is it going to come down in the future? I don't know. So if I don't know what the future of the business looks like, or it's not predictable, then I don't know. I don't know how to value it as much. So yeah, I really don't know. I'm sorry. Okay, we got Lincoln says a discount retail business I really like is Academy Sports and Outdoors. What are your thoughts? What is that? ASO? Okay, so they IPO'd in 2020. And since then, the stock is up a lot, 227% over the past couple of years. Free cash flow yield of 12.3%. $3 billion market cap, so it's a mid-cap company. Okay, so if we check out actually, let's look at the insights. What's going on here? Profitability, gross margin average, operating margin average, net margin average, free cash flow margin average, cash conversion is good. Dividends. Does this company pay a dividend? Very small one. Okay, yeah. So that's why our insights say it's good, because payout ratio is like 1%. That dividend is fine. Revenue is growing like slightly, 3% year over year. Gross profit 5%. Operating income, operating cash flow decreased over the past year. Shares decreased. Whoa. Good ROIC and ROCE. Okay. Okay. So revenue actually isn't really growing. Like it looks like in the trailing 12 months in the past couple of quarters, it's actually come down. Year over year, the revenue is up slightly, but since the first quarter of 2021, revenue has actually come down. Operating cash flow is also down quite a bit. Looks like they've bought back a lot of stock, though. Holy smokes. 236 million, 84 million. In the trailing 12 months, they bought back $572 million worth of stock on a $3.5 billion market cap. What is that? What was the numbers? 572 divided by 3500 is 16% of the stock has been bought back in the past year, which is what we saw in the insights. Yeah, 11.5%. Wild. Okay, so they're buying back a lot of stock, but they're not really growing. That would be my thing. Yeah, I mean, the cash flow yield is nice, but they're not really growing. They are using this cash flow to buy back a lot of stock, though, which is how they're rewarding shareholders. But yeah, for a growth investment, it doesn't really look like they're growing right now. I would want to know how do they plan on growing in the future? Nathan asks, when can we expect a REIT Part 2 live stream? I would say this week. I was waiting for the companies to report. For example, EXR just reported earnings like last week, I think. And I was waiting for the financials to get into stock unlock because it takes a few days for the financials to get in here. So now we have the Q3 results, as we can see right here. So now that we have all the Q3 results, now I can go and start comparing these businesses in the freeform tool to try and find the best one. So yeah, I'll probably do that this week, and we can finish off that live stream. Okay, we got another one. ERPT. EPRT, sorry. Like, why is that not showing up? Okay, Essential Properties Realty. 5% dividend, down on the year. IPO'd in 2018, up since IPO. Price to FFO of 15, $3 billion market cap. Okay. But what? I think I've looked at this one actually. Single tenant properties. Okay, so that's like retail properties, I think. So the revenue declined in the past quarter. That's interesting. I would definitely want to know why that is. Why did the revenue slow down? Why is it dropping quarter over quarter? Did cash flow drop? Cash flow also dropped. In the trailing 12 months, cash flow is at a high though. But yeah, I would want to know why the revenue dropped in the past quarter. And what are the dividends looking like? My internet is always slow when I live stream. I'm sorry. Can we check insiders? What's going on here? My internet is just not working. Weird. Yeah, my internet's being super slow. I'm sorry about that. Okay. So the dividends are growing slightly, looks like. Since 2018, the stock has also outperformed the SPY. Basically doubled the returns of the SPY, actually. Can we check insiders now? Okay, so insiders, CFO bought shares, CEO bought shares at $20 a share, $20 a share. There was some selling going on. Weird. Okay, so the CEO sold and then they bought. What? Oh, that was last year. Okay. So yeah, looks like they were buying shares about 10% lower. Nice dividend. I would just want to know why the company's not growing in the most recent quarter because oh, whoa, wrong button. That was my calendar. Okay, because if we go to EXR, extra space storage, and we go to their financials, and we go to their revenue grew by 5% over the past quarter. So there are REITs out there that are still growing. What is EXR's price to FFO? 18. So slightly more, but it's still growing. So yeah, I don't know. I would look into the growth on that one, EPRT, and take a look at its tenants and stuff. How come some REITs never have capital growth while some compound like crazy? It all depends on what the underlying business is doing. For example, if we take a look at this REIT right here, the stocks follow fundamentals always. Over the long term, they always follow fundamentals. So you got to find businesses where the fundamentals are going to grow over the long term. If they don't grow, the stock will not follow, or the stock will follow. It will just go down or stay flat like TNT right here. So TNT, for example, we can see since 2015, like this stock has literally not appreciated. It's up maybe 3% over the past, again, 8 years. And if we go to their financials, interesting. Okay, the revenue is actually growing, but what is the shares are growing though with the revenue. So can we check the revenue per share? Yeah, so if we take a look on a per share basis, and this factors in the dilution the company's done, the revenue per share has actually been declining. What about the cash flow per share? Cash flow per share has been like steady, right? Well, not steady, kind of declining, but you can see that the cash flow per share hasn't really grown over the past decade, essentially. So since the company's per share fundamentals are not growing, it results in the stock not growing. Now, if you go to a company like EXR, you go to their financials. By the way, first off, you can see that this stock is compounding like freaking crazy. So if we go to their financials here and we take a look at their free cash flow, is that the right metric? This company has negative free cash flow, probably because it's investing in its business. So we're going to take a look at revenue per share instead. And you can see that, for example, this business, its revenue per share has quadrupled since 2010. My cat just knocked over my garbage bin. That's going to be fun to clean up. Okay, but anyways, you can see that the revenue per share for this business has grown by 4x. We need to add an operating cash flow per share. I'm going to message Jake about that. And we need to add an FFO per share for REITs because I don't like using the revenue per share. But anyways, you can see that this business has been growing very, 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 very well, which has allowed the stock to compound because, as I said, are you okay, Tuna? Jeez. But yeah, as I said, stocks follow the fundamentals. So it's just a difference of if the business is growing its fundamentals or not, essentially. Okay, I use extra space storage. Nice. Okay. For business, I can tell you their prices are going up a lot. And if they own the real estate, they are sitting on some nice lots here in South Florida. Okay, so they're increasing their prices then. Do you know if they're increasing prices faster than inflation, or are they increasing prices with inflation? If they're increasing prices with inflation, I think that's kind of okay. It's kind of understood, can make sense. SM Finance, yeah, exactly. So, like with every business, with every investment, basically, I always try to ask, are the fundamentals going to grow on a per share basis, especially with REITs over the long term? Because stocks always follow fundamentals. Always, always, always. So if you can find stocks that are growing their fundamentals, eventually the stock price will follow. And that's the same thing with REITs. Okay, so EXR is growing its prices with inflation and more. Okay, that is interesting. It's almost triple since I rented 8 years ago. Wow, that's crazy. That is crazy. Okay, well, yeah, I'll finish up the REIT video, the REIT live stream, sometime this week, and we can go over the rest of the watch list. And I'll use the freeform tool to compare, like, growth rates, profitability, prices, all that stuff. And yeah, I'll do that this week. But we've been on the stream for an hour and 40 minutes now, so I'm gonna head off. I also just heard my girlfriend get home, so I should probably head off, go make breakfast and hang out and stuff. So that is going to wrap up the live stream this week, everyone. Thank you so much for joining. Wow, we got a lot of comments today. So yeah, I'll see you all in the live stream this week on the REITs when we finish that up. Thank you guys so much for joining. Truly do appreciate it, and hope you guys have a great weekend. Goodbye. I really want to look at more stocks, though. You're welcome, Alex. Again, just thank you guys for tuning in. Yeah, Jake, only 1 hour and 40 minutes. I went an extra 40 minutes without you. You're the weak one. Come on. All right. But yeah, I got to go, everyone. Thank you so much for joining. And I'll see you all this week in the live stream and next week for our next one.